Details, schmeetails. The rally's back on. Everything is fixed, right, Tim?
Well,
that's the way we were moving today.
Well, look, on Friday, I don't think anybody here, self-included, expected anything substantive. Now, we got something substantive, but I'm not still sure what we did. I mean, if you think about it, China at this point, outside of that fentanyl carve-out that Eamon just talked about, is basically now at the same reciprocal tariff, the 10%, as our best trade partner. So I'm just wondering. I'm really wondering what was this all about? Therefore, I'm not even sure what has happened yet. I'll let those folks figure that out. I'll talk about the markets. And if we look at intraday on the 7th to where we closed today, I think the Nasdaq's not only in a new bull market, but it's in a bull market from that close on the 8th. So it was almost a 25% move. And if you think about certain parts of the economy that I think were given a fresh sense of, OK, we don't know where the next 6 months are going to go, but we know that the dynamic around trade is something that, as I think we've said, the worst in terms of that rhetoric is out there. In fact, I think the White House now moves on to tax cuts. I mean, I just think that this is part of that playbook, whether there's real detail or not. Semiconductors are up 40% from that intraday low. That's right, 40 from the intraday low on the 7th, and have outperformed the S&P by 15% since then. There's market leadership if you believe that this wasn't just a snapback rally, and again, through some important 200-day moving average levels.
So it obviously is hugely good news, right, that the rhetoric has cooled down, and hopefully that we're in a place where even if they can't get there in 90 days, that if there's constructive discussions going on, absolutely, extensions, that seems reasonable and actually seems likely. And so I'm pleasantly surprised that China sort of blinked, actually, and we blinked.
I was going to say, who blinked?
We both did. We both did.
Well, we blinked
I really do.
First.
I think we both did. And also, I mean, the pressure on China, look at what happened to their stocks, right? BABA up huge. I mean, so they've been really feeling the pressure as well. So one of the things we still don't know about where's things going to be manufactured. If you are importing goods from China, you really need to think more about, it's already happened a lot, but more about diversifying your supply chain, because who knows? And so I think that, but for China, though, that's been a very scary thing. And so to not have a deal, I think, was just as bad for them. One thing, though, the VIX was in the 50s not that long ago. It's now south of 20, right? So for me, I am a lot closer to a seller here, and net on the day was a small net seller, than I am a buyer. We still got a lot of hurdles, but I do think the rhetoric is very, very positive versus what it could have been.
So I'm looking at you.
Yeah, are you going to say as a silver linings guy on the
No.
Because I feel like
our
you
illustrious
hate this
host.
rally.
No.
In that you don't think that it's reflective of still
you said
the
something
damage that can be done.
You said something on Thursday, and I pushed back pretty hard.
Yeah.
You said something like the bottom or the worst case scenarios are in, and I said no. And I kind of was pushing back a little bit because the way I see it, it's really not about the markets right now. It really is about the disruption that we had in our economy, which I don't believe it's going to turn around on a dime. Because if you're thinking about 30% tariffs, that's a 30% tax on the companies that are importing. They have to make a decision whether they're going to eat some of those or they'll pass it through to consumers. We already have a situation where consumer confidence going forward was low. I don't think it was all to do with tariffs. Okay, small business confidence was low. Look at the 10-year U.S. Treasury yield. It's at 4.47%. At 4.6% a month ago, that is what caused the White House to blink. And I think that's really important. So if we have a rally like this, we have the dollar going higher, but we don't have the 10-year yield coming down. Go back a month and a half when the White House, they said, we don't care about equities. We care about the 10-year yield. Well, we're in a situation right now where the equity market is saying one thing, and that's fine. I think all of us are happy that the volatility that we saw in the first week of April is out of the way. In the stock market, at least in the Treasury market, we're not seeing the volatility. This has been a very orderly climb higher. I'd say the dollar move today was a bit aggressive. Like, we haven't seen those sorts of moves. I know, but, I mean, it really didn't see a downtick all day long. So I guess the point is, you mentioned the VIX. The VIX is down below 19. It was 50, but the 10-year yield could be the thing that causes this to come back in. If we start seeing that move higher, which goes back to my view, and this is why I think I pushed back, but you were right, and I'm sorry. This is on Thursday.
No apologies.
That's what, no, but I mean, you were right, okay? But what I'm saying right now is that I don't think the economy's out of the woods. I think that there's a scenario here where a 30% tax on imports right now, we have this huge imbalance. We take in $450 billion from China, and we buy, you know what I mean? And they buy $150 billion for us. And I just think there's a scenario here where this might not play out the way the stock market is suggesting today.